Today we have the CEO of Appgear, Dmitri. And Dmitri, I wanted to take a moment for people to understand your vision and strategy behind Appgear. First of all, can you talk about a little bit the genesis of the company and what got you excited about joining forces?
Joining forces with
Inca's,
with our conglomerate,
Inca's group of companies.
Absolutely. Well, I would say I've been in the industry for pretty much all my life, and we saw the business cycles of the ups and downs of real estate markets and borrowing, lending, and it was at the end of COVID where the writing was somewhat on the wall that interest rates are going to go up, and so we structured ourselves or positioned ourselves rather to be able to maneuver and work within this market, be able to actually bring benefit, and we know that banks are tightening their credit, so there is room, there is space for non-bank lenders to actually enter the market, or there was. I would say it's somewhat saturated now, but there's always an opportunity. There's always an opportunity to go in and do something of value within the market. The strategy, I would say, is trust-based lending. Of course, where we have, I would say, we have two main pillars that we're looking at, which is collateral and capacity. And I don't think this is very different in the market. We're not necessarily trying to reinvent the wheel, just do what we do really well. And I think we have all the pedigree to do that. And we've been around now for, as I said, 3 years as a company. And I like where we're going.
Yeah, me too. I would say, can you explain people who are having difficulty understanding what non-bank and banking differentiation, what's the difference between that, a banking process and a non-banking process for somebody who's looking for capital?
So a bank would be a purely affordability lender. Can you afford the carrying costs, period? Even if you have the right kind of collateral, the right kind of capacity, if you have the right kind of collateral, but not the right kind of capacity, then the bank may walk away from the deal. That's at least from what we see. In a nutshell, I would say that the banks are more income statement-based lendings versus balance sheet. And a lot of the net worth that you see is more of a balance sheet net worth. So the non-bank lenders would be a little bit more open to looking at overall net worth statements, overall net worths of individuals, of borrowers, of entrepreneurs. There is definitely more room for that. Plus, it's the industry specialization. So lenders that would know a particular industry better, they may want to roll up their sleeves and dig in a little bit deeper and participate in deals that banks would not participate in otherwise, simply because they are okay, the non-bank lenders, they are okay to participate and be part of that deal or another. So,
can you talk about also in terms of the process, in terms of time, compared to the bank and non-bank?
Absolutely, that's where we pride ourselves on the speed and the turnaround. Very common in alternative lending. Bridge loans are very, very common, where we have an understanding of how long banks would take. Not because their banks are slow. That's not. The idea is not to put them down. It's just the process itself. Could take a little longer because of one thing or another, and of all the approvals that they have to go through. And again, alternative investors or alternative lenders, which is sometimes used interchangeably here, they would be okay to quicker to understand the actual deal and move into it. Needless to say, the less complex the deal, the quicker it is. So in the residential space, obviously it could be potentially quicker than in the commercial space, but again, it really depends on the deal.
You talked earlier about value. One of the things I wanted to take a moment, like where do Appgear bring value into this ecosystem, and what are we trying to service the client, and how we service our client in terms of transaction?
So I would say, okay, so there are two clients, right? Is it the investor on one side or the borrower on the other? And so the value add obviously to the investor is that it's a non-correlated investment, non-correlated directly to the financial market. Every dollar is backed by a real estate asset, or at least debt on real estate. Well, it would provide a little bit more safety, as you know, the pension plans, and there's a lot of the money that's circulating in the public is now moving towards alternative investments, whether it's being equity or debt. So there is undoubtedly room, and everybody understands that. That's where you get the non-correlated investments. Plus, there's what we focus on is capital preservation and income generation, and then so that's exactly what we offer to our investors. On to our borrowers, it's what we talked about previously. Quicker access to funding. Yes, it still has to be properly collateralized, properly securitized, properly with the proper capacity to carry the costs, but we can move quicker. And typically our debts are not longer than 12 to 24 months, so it's a fairly quick turnaround. We understand that we are a jumping board or a springboard into better life for our borrowers.
For mortgage brokers, how valuable this relationship is for Appgear Capital? I know that we hosted a couple of events gearing towards mortgage brokers, but more and more that we're moving forward, the more and more I'm realizing how important that relationship is and how valuable those relationships are, and we have to foster it, and how working with the right one can make it break your year, basically.
Absolutely. We treat our mortgage brokers as our clients. Really, they themselves don't want to deal with too many lenders out there. Even if they're available, yes, they'll keep, they'll shop around just like any other client would. But at the end of the day, when their client is getting into the non-bank space, into the private space, if you will, chances are that the deal is not that simple, and they want to have that conversation with somebody that they trust, with somebody that they have experience with, who will actually get the deal done, help their client, and at the end of the day, help them build that relationship with their client. In many cases, we help them build out an exit strategy, right? So I'd like to go back to the customer service space.
Yeah.
And actually, I'd like to throw the question back to you.
Yeah. I would say from the investment side, one of the things that I try to pride myself is having a direct communication with everybody that's on our fund. Either if it's an email or text or even a call, I think it's so important for people to know that you're there, you're one arm length from them. Yesterday, I got a text at 9:00 at night from somebody that we were trying to communicate with. I responded. Most people wouldn't respond, but this is the type of relationship we're building, because she wants to know that we are available, but she wants to know that even though we want her to be part of our ecosystem, but she knows she has access to everybody in the team. So that proximity is what I'm trying to create for people to give us that trust, because every time we get a new client, for me, I feel we have to foster it. You use a word that I like a lot, make them sticky. And that it's really based on customer service. It's really based on how do you manage that relationship with all clients, from the person who put $1 to the person who put $1 million, they get the same service, the same access to everybody, and I think that's valuable. And I think that we're getting good response from people, even apologizing sometimes because of their own delay. But so the customer service question for me, it's a long-term journey. It's not a one-time. It's quarterly. It could be monthly, but they have to know that you're there. They have to know that they can have access to you.
Absolutely. Well, they say that sales is the best, the highest level of service is sales, right? Because at the end of the day, built on trust. And how do you build that trust? It's not an overnight thing.
Exactly. And I think that from just talking to our colleagues that's out there, everyone is doing the same thing. They're trying to take care of their ecosystem, to build that bridge, to make sure that the relationship is not transactional. It's more relationship based, and that build future success.
So what do you see today in terms of investor confidence?
That's a good question. This morning, I was actually in a small gathering for family offices, and a lot of them, they're all looking for deals, but they're all looking for deals with people that they can trust. They would rather sit and talk to other colleagues and peers, knowing what you're working on, before just deploying capital for the sake of deploying capital. I believe that right now, in terms of investment trust, everyone is looking for people that they can sleep well at night, where whatever decision they make, they know they can go to bed. I did the right choice. And this is from selecting managers, selecting different funds. Everyone wants to make sure, like, whatever trigger they pull, that they don't have to second guess if this is something that I should have done more due diligence or dig into. Do I have access to these guys after I invest? So I think everyone is looking for that type of investment right now. People are very confident about the market, and I think, like you said, business is doing well. People are growing. People understand that there's room to do deals. It's just the deals are very few because you have to make sure you trust everyone you do business with. So I think everyone is going through the same process, even us. We rather do multiple times the same deal with the same people that we build those bridges with than somebody that we have to learn and relearn their process.
Absolutely. And then every next deal is that much quicker. Right?
Exactly.
You've gone through all the vetting process. You've gone through through understanding who you're dealing with, and now you actually focus on the actual deal.
And I think that's what everyone is trying to get to. Some doing it better than others. A lot of colleagues who were either part of a pension fund, and they bring that kind of like equity with them, the brand equity, the good faith, and they go to the market to raise capital by leveraging that. But in terms of family offices, a lot of them are kind of like small circle. One referred to the other, or they know something that you don't know. You could share those insights. That's valuable for them also.
So a lot of them invest within their own circles because they want to deal with people they trust, and some of them would like potentially to deploy more money.
Absolutely.
But the number of deals out there within their own space is somewhat limited, and so that's kind of what we do. We actually go out there and hunt for those deals, and bring it together, package them nicely, and add value to those. Those who are looking for it.
I think in the value chain of investment where we are right now, I think we started from a small, very, very team that was really focused on, like you said, risk adverse. And I think now that we got kind of our wings, I feel like now we're being even catered to a lot of big opportunities, but we're still operating like a risk adverse company. So that's quite interesting because it's hard to do, to still be seeing the big deals, but it's still operating in a risk adverse.
Well, I think part of it is the patient capital, really.
Yeah.
I mean, when you have a couple of anchors there's no magic, there's no secret in that regard, right? So the patient capital will trump, rushing out and deployment, quick deployment. I guess that's what I'm trying.
Yeah, and I think that's our secret sauce, to be honest. Every time I talk to one of our colleague in the family office space, they ask us, what's the differential between you and the other funds in the lending space? And one of the first thing I said is patient capital. Like we are here to stay, but most importantly, we have anchors who understand the business but also understand the market, and they're giving us all the opportunities to navigate around that space.
Absolutely. Absolutely.
Thank you today. It was great to just kind of have a conversation with you to just understand a little bit the vision and the strategy. But I would love to do this more often, just to have a chat, just to see how you're thinking, how you're seeing things in the macro space in terms of you're kind of the guide of Appgear Capital. So just to see how you're seeing the deals and how you're valuing the market, and we should definitely do this more often.
Well,
Thank you.
We're in this together. We no captain can sail the ship on his own. So we have a very, very good team and an amazing support system. So thank you.
Thank you.